Let us now proceed to the accounting analysis for Universal Robina Corporation. Step 1. What is the objective? This accounting analysis aims to evaluate the degree to which the firm's accounting policies and procedures capture its underlying business reality. The company's shares are traded in the stock market. Therefore, there is a need to assess the quality of their financial reporting as it will be the basis of the investing public in making their decision. Step 2. What are the information available? Presented to you are the references used throughout the analysis. First, the annual reports from the years 2018, 2019, and 2020, Philippine SEC Form 17-A for the year 2020, Auditor's Report for the year 2020, Material Related Party Transactions Policy, and Annual Corporate Governance Report. Step 3. Examine the audit report. URC's financial statements were audited by Sisip Gores Velayo and Company. The audit firm was established in 1946 and it is the Philippines' largest multidisciplinary professional services firm that provides integrated solutions and draws on deep and diverse competencies in assurance, tax, consulting, and strategy and transaction services. On the 5th of April 2020, the firm issued an unqualified audit report on URC's financial statements. This is 4 months after the reporting period of the company. The group discovered no audit deficiencies in the audits of 2018, 2019, and 2020 financial statements. The audit report covered the consolidated financial statements of URC and its subsidiaries. This includes all financial statements mentioned in the PFRS. For the key audit matters, only one key audit matter was identified for the audit of the year 2020, and this is the recoverability of goodwill and intangible assets. There was complexity in auditing management's annual goodwill and indefinite-lived intangible assets impairment tests because of significant judgment required to identify the fair value of cash-generating units, as well as the sensitivity of the fair value estimate to the significant assumptions. In addition, there is heightened inherent uncertainty in these assumptions because they are referenced on management's expectations about future market conditions, and the current economic status is heavily impacted by the coronavirus pandemic. The auditors found no material misstatements on the recoverability of goodwill intangible assets that would affect the financial statements. Let us now proceed to the audit fee analysis. Presented in the table is the breakdown of the audit fees for the years 2019 and 2020. It can be observed that the fees are strictly for audit purposes only. No other service was rendered to URC. Additionally, the audit fees increased by 1.47% or 178,000 pesos. Such increase is immaterial and not enough to signal a possible collusion between the company and the auditors. Moreover, it may have been caused by additional expenses incurred by the audit team due to COVID constraints. Furthermore, the objectivity of the auditors and their independence are reinforced by the fact that they did not render any other service to the company aside from auditing. Step 4. Look for unusual transactions and events. For the year 2020, URC acquired assets from Rojas Holdings Incorporated. URC acquired the sugar mill, bioethanol plant, and shares held by RHI in Nahalin Agri-Ventures Incorporated of the RHI Group in La Carlota City, Negros Oriental. This acquisition was approved by the Board of Directors on March 10, 2020. The purchase will allow for operational synergies between La Carlota and URC's existing operations in sugar. This transaction caused an 8% increase in the property, plant, and equipment of the company. URC now owns 95.82% of Nahalin Agri-Ventures Incorporated, adding it to its portfolio of subsidiaries. Step 5. Assessing accounting policies. URC must make judgments, estimates, and assumptions in terms of revenues, expenses, and assets, and liabilities in preparing their financial statements according to the mandates of the PFRS. Estimates and judgments are constantly evaluated and based on historical experience and other factors, such as expectations of future events considered to be reasonable under the circumstances. For the judgments, URC makes significant judgments on the revenue recognition, contingencies, determining whether it is reasonably certain that a renewal and termination option will be exercised, URC being a lessee, assessment of retention of control, accounting for call option, and assessment of elements of the business. As for areas of estimation, the following are the areas of concern of the URC and how they estimated it. First is the assessment of ECL on trade receivables. They use provision matrix based on historical default rates for trade receivables and appropriate groupings if its historical credit loss experience shows significantly different loss patterns for different customer segments. Assessment for ECL on other financial assets and amortized costs. They determine the allowance of ECL using general approach based on probability weighted estimate of the present value of all cash shortfalls over the expected life of other financial assets at amortized costs. Determination of fair values less estimated costs to sale of biological assets. The fair values of biological assets are determined based on current market prices of livestock similar age, breed, and genetic merit. Costs to sale include commissions to brokers and dealers, non-refundable, transfer taxes, and duties. Impairment of goodwill and intangible assets with indefinite useful lives. Recoverable amounts of intangible assets were determined based on value in use calculations using cash flow projections from financial budgets approved by management covering a 5-year period. Assessment of impairment of non-financial assets. URC assessed the impairments of its non-financial assets whenever events or changes in circumstances indicate that the carrying amount of an asset may not be recoverable, and determined impairment loss whenever the carrying amount of an asset exceeds its recoverable amount, which is higher of its fair value less cost to sell and its value in use. Determination of the fair value of the intangible assets and property, plant, and equipment acquired in a business combination. It is based on the net sales forecast attributable to the intangible assets, growth rate estimates, and royalty rates using comparable license agreements, and PPE are based on comparable properties after adjustments for various factors such as location, size, and shape of the property. Estimation of pension and other benefits costs. Present value of the defined benefit obligation is determined by discounting the estimated future cash outflows using interest rates of Philippine government bonds with terms consistent with the expected employee benefit payout as of reporting date. Recognition of deferred income tax assets, annual review of deferred income tax assets, and reduction of such if full utilization of deferred tax is no longer probable. Valuation of ROU assets and lease liabilities. IBR is determined using the rate of interest rate swap applicable for currency of the lease contract and for similar tenor. Lastly, COVID-19 pandemic, no significant impact on business operations but affected collectability of accounts with customers, cash flow projections, and available market data. We compared the accounting policies of URC to San Miguel Corporation in order to assess it further. And upon careful observations of the financial statements of URC and SMFB, the group found that both companies share the same accounting policies for the revenue recognition as well as on their significant estimates and judgments. Hence, the accounting policies of URC are on par with the industry standards. This is, however, expected by the group due to the strict compliance of URC to the Philippine Financial Reporting Standards. Changes in accounting policies. The accounting policies adopted are consistent with those of the previous financial years, except that URC has adopted the following PFRSs and Philippine Accounting Standards and Philippine interpretations beginning January 1st, 2020. These are PFRS 3 Business Combinations, the definition of business, PFRS 7 Financial Instruments, Disclosures, and PFRS 9 Financial Instruments Interest Rate Benchmark Reform, PAS 1 Presentation of Financial Statements, and PAS 8 Accounting Policies, Changes in Accounting Estimates and Errors, Definition of Material, Conceptual Framework for Financial Reporting issued on March 29, 2018, PFRS 16 COVID-19 related rent concessions. These changes in accounting policies are the same to that of the changes reported by the previous groups. Also, there are relevant standards issued but not yet effective for URC. These are the amendments to PAS 1, Classification of Liabilities as Current or Non-Current, and PFRS 17, Insurance Contracts, which will be effective beginning on or after January 1st, 2023. These selected standards have a significant effect on the preparation of the consolidated financial statements of URC. There are no prior period adjustments for the year 2020 as presented in the separate schedule for retained earnings of the company. This provides an implication that the company's accounting policies have been applied consistently and accurately. Step 6. Assessing accrual quality. The net income versus cash flow ratio can be used to assess the prevalence of accruals in a company's financial statements. Presented in the table are the results for the quality earnings ratio. For 2017, it's 1.28, 2018, 1.58, 2019, 1.54, and 2020, 1.63. The group used operating cash flow as benchmark to assess earnings or accrual quality. This is relevant because of the relation between cash flows, accruals, and earnings. The ratios from 2017 to 2020 are all greater than 1. The ratios from 2017 to 2020 are all greater than The ratios from 2017 to 2020 are all greater than 1. Moreover, it can be observed that the ratios remain consistent throughout the years. Although there have been changes, the differences are not drastic. It can be inferred that the earnings of the company are of high quality. This means that it is easier to predict and is consistent. Additionally, this also provides an implication on the consistency of the application of the accounting policies. Lastly, it may also indicate that URC is conservative in its approach to income recognition. Step 7. Disclosure requirement. Does the firm provide adequate disclosures to assess business strategy and its economic consequences? In the Business and General Information section of the annual report, URC makes a straightforward statement about their business strategy. They included main business strategies that they are putting in place, and it was addressed thoroughly, and key aspects of their strategy were highlighted. The company also highlighted its strategic advantages in the same section. In their sustainability report, an analysis on the economic performance of the company was given, and the effect of the ongoing pandemic on the business was also presented. Does the firm adequately explain its current performance? The annual report explicitly mentioned URC's management commentary on its current performance. They addressed the revenue sources and the profitability metrics they used to evaluate their operating efficiency. If the firm operates multiple business segments, what is the quality of segment disclosure? It was disclosed that URC is involved in a wide range of food-related businesses, which are organized into 3 business segments: branded consumer food segment, agro-industrial segment, and commodity food segment. Information on these segments was laid out in the notes to financial statements. Aside from these, URC also provided disclosures on their income and other items based on geographical parameters. They categorized such items into 2, Philippine-sourced and international. Is there any related party disclosure? Transactions with related parties were thoroughly disclosed in the Note 34 of the financial statements. It has listed the transactions from 2020 to 2018. Furthermore, the remaining balances of the related party transactions for 2020 and 2019 were properly disclosed. The group has judged that URC has a good disclosure quality. They followed the necessary disclosures mandated by the Philippine Financial Reporting Standards and also added information that are relevant to the external users of the financial reports. And lastly, step 8, evaluate and conclude. The group has determined that the financial reports of Universal Robina Corporation are reliable. It has been audited by a competent firm equipped with necessary skills and tools to do a quality audit. The accounting policies of the company were all in accordance with the Philippine Financial Reporting Standards and were applied consistently. Moreover, they issued adequate disclosures which boosted the reliability of their financial statements. Lastly, there is no significant issue that requires the need to recast the financial reports. Hence, its accounting policies and procedures capture its underlying business reality. The valuation of the firm can be further assessed with the financial analysis. And that would be all for the accounting analysis of Universal Robina Corporation. Let us now proceed to the financial analysis of the said company, which will be reported by my groupmate. See you later!